Good evening once again, ladies and gentlemen. This session is titled Navigating the Dire Straits, and at a time when global conflicts are redrawing the trade routes and also testing supply chains, the conversation truly has to be around, is India truly prepared? What are the risks that we are facing? And more importantly, are there any opportunities that India Inc. is already looking at, at this critical juncture as well? So we have the best set of panelists that we could have probably expected for this session from various industries, and to try and understand where do we go from here. Vibha, I'm going to be starting off this conversation with you, and I want to understand from your own lens, how are you seeing this entire West Asia conflict? Is it just another geopolitical flare-up? Or do you really see a structural change in which we are going to be seeing an even more fragile world order? And what is going to be the response from India Inc. towards this then?
So thanks for having me here on this panel. No, it's not like anything we've seen before. Very, very confusing signals. So it's even more difficult in my view to plan for anyway a VUCA world, but this is beyond VUCA world. So where does that leave us to your second part of the question? Compared to a lot of other nations that are very, very energy dependent, I think we are fortunately in a relatively better placed position, largely domestic consumption. The government has already taken very swift interventions on excise and so on. So hopefully the end is near and things ease off a little bit. If they don't, then I think India will also start feeling the pain sooner rather than later, unfortunately.
Sanjeev, I mean, this is could potentially be our worst nightmare, right? In terms of supply shocks, price shocks. At the moment, everyone's in wait and watch mode, but how bad could the situation possibly be?
Every crisis, I think the generation which is facing the crisis, they say it is unprecedented and perhaps the worst. The first thing we have to understand is the era of great moderation is over. We have seen, and I used to run the Unilever business in North Africa, Middle East, when the Arab Spring happened. It was significantly worse than this. Significantly. Yeah. Look at India today. Just before the onset of this war, we were talking about the Goldilocks moment, the famous words of the RBI governor. We were saying that the inflation is contained and the economy is moving at a good rhythm. But still, when you look at it, inflation was hovering at less than 3%. We had an armament of over $700 billion in forex. We were growing well. Yeah, you can't rubbish 6.5% growth, a nominal growth of 9-10% for the size of the Indian economy. Just after the global financial crisis, when the Fed said taper, the rupee crashed. Today there has been some intervention, but if the volatility increases, I'm sure RBI has the arsenal to kind of control the volatility. So the first most important thing as a nation we have to do, or as leaders we have to do, is not panic. Panic doesn't help. That doesn't mean we should be living in a cuckoo land. I call the world brutal optimism. Brutal optimism is it's a paradox. Blood, sweat, toil and fear, but ultimately we shall prevail. That's what the country should be looking at. It is going to be tough, and more so if the war continues for, say, beyond the next couple of weeks. That's when the pressure will be really high. But I don't think this is going to have an indelible impact on India's macro story or the long-term story of India.
Amish, do you also believe that India's own Goldilocks scenario is under threat because of these external headwinds that we are facing at this point in time?
So I think Sanjeev has nicely articulated the macro scenario. I think if you look at India and over the last many years, I think Ashish spoke about it a little earlier. The growth story of India has been doing well on a consistent basis. We have been able to manage COVID crisis. We had the geopolitical crisis which happened in 2022. We had the tariff uncertainty, and you have the current geopolitical crisis. I think if you look at the global volatile index, it is at its peak at this point of time. But if you look at India, given the domestic consumption story, the growth story, the infrastructure investment, the policy measures, I think, if you look at what India has been doing proactively to manage each of these crises over the last many years, has helped navigate and bring us to a position where we have a very good current account deficit right now. The buffers that we have, as we call them, I think they are in a good place. The fiscal position is reasonably good. I think the debt to GDP, and Ashish spoke about it a little earlier, I think India, relative to other parts of the world, I think is in a good place. I think that gives us the, I would say, confidence to demonstrate that we are resilient. It is a challenge. I don't want to take away that thought that it is not a challenge. But I think the environment that we are operating in, if you look at the way the government is proactively managing the fuel prices to trying to cushion the impact for the retail out there, the way they are managing the stocks and the buffers and the ability to negotiate and talk to various countries beyond to diversify supply chain. I think India is in one of the better positions if you look at some of the other countries in the region and outside. And I think all of us hope that this ends fast, because the longer it prolongs, I think that's where the challenge is likely to be.
Shanti, let me bring you into the discussion. Lots of interesting points raised, so I'd love to get your perspective on whether you feel we're adequately hedging right now, talking about the government's moves. Was it more reactive? Are we actually preparing alternative solutions? And even in terms of the scale of the shock to the economy, is this going to be something that will have a structural long-term impact in your view?
So let me just say additional points. Sanjeev talked about resilience of macros, right? Which is growth, inflation, currency stable, the kind of reserves we have, etc. We went into this conflict with stable macros. We also had stable micros, strong corporate balance sheets, strong bank balance sheets, very low leverage in the system. And since COVID, looking at the growth we had, even the SMEs had all built resilience in terms of capital. Growth capital has significantly funded corporate India, mid, small and large. So while this will increase costs, it will cascade. Oil at $110 and India basket at $146 billion will make it expensive for input and raw material. So it will cascade. But when you had inflation at 2.5, you can take it up to 4.7. It will be resilient, right? Yes, growth will take a little bit. So as again 7.2, perhaps we will grow at 6.2 or 6.5. But that still will be the best in the year. I see another silver lining. I believe in every adversity, there is something that you can do. And I think the extent of reliance for LPG and oil on West Asia has come to fore even to the common man. And I'm very positive that something will come out of this in terms of reducing and diffusing the risk. It can be alternate fuels, it can be energy transition, it can be different forms of sourcing. We've already been talking about Atmanirbhar on manufacturing for the last 2 years. We moved on semiconductor, we moved on exports. But I think there is an opportunity for us to really look at how you can reduce and diversify your risks as far as concentration on oil goes. And I think I'm positive about that. If this continues for the next up to, I think, 30 to 60 days, we're still okay. We'll have a 6-month impact. We will bounce back because we are resilient. But if this continues for 6 months, there will be an impact. But I'm confident that we have a strong leadership at the country level, at the corporate level, at the governor, the RBI level. I think they all work together and we will come out of this. But we need to watch closely.
Sanjeev, let me come to you, and I want to understand from you at this point in time, how are you gauging what India Inc. is doing? Do you think with these unprecedented risks that we are facing one after the other, it's been some time now that we've been facing different forms of risks, Have we become smarter as India Inc. dealing with the risks? Are we still taking bold bets or have we become risk averse?
Well, I think first of all, I think we're getting used to it. Let me just say that, because earlier we used to say that maybe some of these events happen once in 10 years. Now these are happening once in 10 months. I mean, from COVID to a bit of a financial meltdown and now this, and of course AI and technology and so on and so forth. So I think India Inc. is more or less getting used to it, and I think it's in a positive way. In a positive way because we are also embracing it. It's not as if that we are fearing it. As I mentioned earlier, whatever I might say today might turn out to be equally untrue 1 year later when we are speaking on this forum, because as many of my co-panelists have said, one doesn't know as to how long that will last. I do believe that if it lasts longer, to what Shanti was just saying, I think things might become worse before they become a bit better, because we'll get used to, what's happening. I think two elements which I see. I certainly see India Inc. being a lot more resilient. Obviously, there are challenges, particularly on the supply chain side. There are significant challenges on anything which is petroleum or petroleum derivative. I think there are certainly costs going up, including fertilizers, in chemicals, anything. I think there are certainly supply chain challenges that many of those businesses are facing. Many of them will possibly not even reflect in the March results. They'll possibly come through in the June results, but they are being resilient about it. I think that's the one good thing. And just as we have been, today nobody is talking about AI, for instance, right, which was the biggest discussion point maybe just 3 weeks back or 4 weeks back. I think just as we were showing resilience on that, I do feel that will come through. There are two things which are very, very important. One is, and when we define the word resilience, the need to continue to invest. And I think that's something which comes through, because capital and technology, embracing technology and making sure that you are putting capital out are going to be two key elements. As many have said, Indian balance sheets are strong. They have the ability to navigate this. The critical thing is execution. Because yes, otherwise there will be a lot of naysayers who will say that the Indian budget was made at $65 a barrel, and how would a fiscal deficit go through the roof at $110? So there will be a lot of naysayers, but I do believe that this is the moment when India Inc. has to get counted, show up, continue to invest, continue to innovate, and we'll come through this.
So on that note, and talking about India Inc., everyone, the regulators have already been grumbling about the lack of private capex, and the numbers were a little better this time around. And we are hearing reports of capex, but it's still dependent on consumption. And I know this is a slightly more longer-winded question and answer, but if we do see that oil shock coming in, if we do see this lasting a bit longer, there will be an impact on consumption, and we're going to see the story get worse from that point of view. How are corporates likely to react in that sense? How are they thinking at this point? If you could, any of you want to take this and maybe give us an insight into really what's already working in your minds as you prepare for the next couple of quarters. Sanjeev?
Sure. If we have to look at it from a lens of cooperation, I think the first most important thing is the mindset you bring to a crisis. And in Chinese language, the word crisis is made up of two characters. One is danger, the other is opportunity. Yeah. So whenever there is a crisis, there is an opportunity lurking in the corner. So you have to ask yourself that what do you need to do to harness that opportunity. The second important bit is whether it's a nation state or it's a corporation, your North Star. And the North Star is look after your people. And the second is ensure that your long-term purpose doesn't get destroyed. Yeah. So, and when you look at it from this lens, then the third important bit which comes in is Amish has been talking about resilience. Linked to resilience is agility. What is agility at its core? At its core, agility is the speed with which you identify challenges and opportunities, the speed with which you decide to take an action, and the speed with which you act on it. When you have this kind of crisis, throw away your 5-year plans. Yeah, they don't matter to you. What you have to do is very clearly, whether allocation of resources whether it is capital or whether it is human resources, you will have to be looking at it from a very different lens, very flexible lens. And when you put those things into view and keep your North Star intact, when I talk about look after your people, it's not just looking after your own people, remember, looking after your consumers. Don't take short-term actions. Yeah, don't worry if there would be a small hit on the profit and loss for a quarter or two. Don't end up destroying your core proposition. That's important.
Shanti, go ahead.
Yeah, I'd like to add two things. And I go back to take a lesson out of COVID. And I talk about the financial sector. We leapfrogged on digital when COVID happened. Because people couldn't come out of their homes, could not access banks, could not take cash, and everybody started using digital. I remember an 87-year-old surgeon who learned to pay his staff salaries using phone sitting at home. So I think we leapfrogged on digital. I think every adversity, like Sanjeev says, I said that earlier, has an opportunity. I think when crisis hits, teams come together. You know, the unit starts becoming one. Leadership starts getting together. When they get together, ideas form. What will happen? Growth and margins take a hit. That's what happens in these times. I think we are resilient enough not to have violent deaths unless this goes over for 3 years, then in which case all bets are off the table. I'm counting on the fact that that's not going to happen, right? But growth and margins ultimately are impacted, and companies will learn how to become more efficient, how to manage, and how to survive. So I think the survival instinct kicks in, but I'm more passionate about something new, something different, because everybody is in crisis mode, comes together and think differently.
But Shanti, what will be the shape of the economy after this crisis? After COVID, it was a K-shaped recovery in the economy. What are we going to be seeing now?
When we went into COVID, it's very pertinent to note, our economy was actually going down. I don't know how many of you remember, but growth was 4.5%. I'm repeating, 4.5% was the GDP growth. We went into this crisis at 7.4% GDP growth, the highest in the world. Okay? So from that perspective, we have gone in with a very strong resilience on every macro. Even if it lasts 6 months to 1 year, yes, there will be an impact. Yes, there will be an impact on growth. Currency will take a hit. But I think our ability to bounce back will be probably stronger than what we did during COVID time.
I think everyone has a follow-on, but Vibha, let me bring you in.
Yeah, I
first.
would add to that to say never waste a good crisis. And it does bring out the innovation in India. And COVID really taught us that in more ways than one. And even during the trade crisis and the tariffs, you could see the weavers in South India figuring out alternative sources of supply chain. Yes, it will take some time, but the same analogy of finding different solutions. There might be some temporary pain. And exactly like Shanti said, growth might slow down, but slow in the context of rest of the world. Not really in the true sense that there's going to be negative growth or, very low single-digit growth. It'll be a shade lower than where we have been tracking. But I do think that we will find, alternative solutions to wherever we are hurting, especially on some of the key supply chain, energy and so on. But we will figure out alternate ways with government support as well. So I would see this not as a permanent setback. I would also see it as relatively better than how the world is faring. Yes, some short-term pain will be possible if this is prolonged, but I don't see this as a showstopper that we can't bounce back.
Amish, I want to come to you and I want to ask you, how is India being looked at from a global lens amidst all of this at this point?
I think, in fact, if you ask from a global perspective, you are looking at more bilateral versus a multilateral globalization that you were seeing some time back. And if you look at India's relationship with the region, whether it is the Middle East region and all the countries out there, you look at the other major economies in the world, developed economies, whether it's Europe, US, Russia. We just had something opening up with China coming into India. So I think India is being seen as possibly a growth, a global leader. whom people are looking up to and saying, okay, how do we leverage the relationships that India is building with different stakeholders, right? Diverse stakeholders, and being able to manage that to help India as an economy as well as to help the global side. I think India is playing a larger role. It can be seen as a global leader and as a global partner. And I think that's something which is changing over the last many years. I think the other thing is, if you look at global investors and you look at how they are looking at India, I think the global macro being resilient, the corporates and the banking institutions in India being at a very good place over the last 10 years. I think Shanti spoke about it. The gearing ratio, the interest cover so interest cover has doubled over the last 10 years. The gearing ratio has become half, which means that corporate India has deleveraged over this period of time. The ability to invest, to absorb shocks, the ability to invest in the future, I think all of that looks pretty healthy at this point of time. And I think the new norm is going to be to handle chaos. I think, all of us are talking about resilience and agility. That is what we will have to learn to deal with, whether it's supply chain, whether it is demand, whether it is, impact on your core products, and how do you plan for that, including investors, because I think financing conditions in some parts of the world might get impacted if this prolongs for a period of time. I think India, much more stable compared to many other places, and I think global investors are looking at India relatively much better. That's what I would say.
So, Sanjeev, this is a very, very bullish panel. and if anything, it should reassure all of us as we walk away from here today. But, Sanjeev, last word from you in terms of if you're looking at the big opportunity going forward and you're coming at it from, of course, a bird's eye view, where is the next big thing going to be when it comes to the ecosystem, industry? Where are we going to see the biggest opportunity?
So, I think the challenges remain the same as they were even before this crisis happened. I mean, you look at our productivity in our industry, labor productivity, that's been going down. There are a lot of surveys which actually indicate that labor productivity has indeed been going down in India. We still do not like scale. There is still a preference for everything small, etc. And scale gets you the competitive advantage. If you have to be competitive, yes, of course, with all the supply chain shocks, what will happen is that our cost of supply will become even more adverse. So we will become less competitive in some ways, right? So that's going to be a key area for us to focus, that how do we remain competitive with all the uncertainty that is around us. I think we have made significant progress, I think, as Shanti and others were saying, and we're going into it 7.4. But the question is, can we do it consistently? Can the average factory of tomorrow be better than the best factory of today? Is the challenge that is in front of us. So I think that the devil really lies in the detail and how we can execute. I think the plans are there. Yes, we can say that, the government's fiscal might suffer, privatization has to happen, FDI has to open up. I think those are all very well understood topics, but the challenge, I think, is in execution. And much of what we said prior to this crisis remains possibly even more relevant today.
Okay, I think Sanjeev last.
Yeah, one of the big opportunities staring at us is the energy autonomy. And it has really come home to roost now. One is, how do we diversify the supplier base? The second very important bit is, today, if you look at it, our non-fossil fuel based capacity has touched about 50%. We need to accelerate on that. How do we double down on nuclear energy? How do we go down the path of modular nuclear reactors that we have been sitting on the fence but not really taken a big leap? How do we accelerate EVs in the country and reduce our reliance? I think this is a fabulous opportunity, and I'm absolutely confident that this will not have a big impact. And if we can look at it as an opportunity, we will go a long way.
Well, thank you so much. I think this has been a panel with many compelling insights. Thank you so much. A warm round of applause, ladies and gentlemen. May I call upon stage Mr. Alok Nair, CEO of Business Today, to please come up and felicitate all our panelists. And if we could also request Mr. Ashish Kumar Chauhan, MD and CEO NSE, to please join us on stage, sir, to present a set of token of appreciation for all our panelists for this one, sir.